This is a Load Management Dialogue presented by PLMA. Here you'll discover practitioner perspectives on flexible energy load management, demand response, and distributed energy resources. Today's session is part 3 of a series of discussions concerning the industry impacts of FERC Order 2222. Part 1, we heard from 2 members of the FERC staff about the intent and purpose of the order and the current status of the various RTO compliance filings. Part 2, we brought together a group of utility representatives for a conversation to talk about how their companies were preparing for this world as DERs become ubiquitous. Today, we bring you a group of panelists from the investment community to add their perspectives to discussion. Moderator for today's session, for today's panel discussion, is Eric Van Orden of Virtual Peaker, who also serves as the leader of PLMA's strategic initiative to spark DER innovation. It's my pleasure to hand this over to Eric to introduce the panel.
Good afternoon and good morning to you all. Thank you, Rich, for the intro. And again, my name is Eric Van Orden. I've been leading PLMA's Spark DER strategic initiative. And that has included this summer series of related to FERC 2222, which has expanded a bit beyond with the idea of the Spark DER Innovation Group, that it's not just about policy, but also a number of other challenges that we've worked through over time. My day job, as Rich mentioned, is sales director at Virtual Peaker. I've spent about 15 years in the utility and power sector, including 7 years at Xcel Energy and business development roles at other companies, including Solar City, GridPoint, and Copper Labs. Today, we have a great panel of venture capitalists in the clean tech, climate tech, sustainable energy space to talk about FERC 2222, DERs, and more. If the live panel here is anything like our prep session, I'm sure we're going to have a very spirited and informative discussion. Please do type your questions into the chat if you have them. I have a couple prepared to kick off the session and get the conversation going. But with that, very much looking forward to this. And but enough about me. I'll pass it over to the panelists. If you would please spend about 2 or 3 minutes introducing yourself and your firm, that'd be great. I'll start with Alta from Huck Capital, in part because I know you have to bounce off at the top of the hour for an important project that you're trying to put together. Alta?
Thanks so much, Eric, and thanks to PLMA for hosting this session today. So Alta Colo here, Vice President at Huck Capital. So Huck Capital is an impact investment firm. So we are essentially focused on later stage investments and looking specifically at companies that will guide the consumer decarbonization journey, both on technology, product, services, the whole kind of gamut that spreads there. And kind of my own personal expertise here, I'm probably one of the few people you'll meet that has a PhD in demand response. So, you know, made a career out of it and still bullish. But I hope, you know, moving forward, we'll call it more virtual power plants than just demand response. So that's my 2 cents there. I'll hand it over to the next panelist now.
Great, thanks. Mike Grenier, do you want to jump in?
Sure thing. Mike Grenier, Blue Ox Ventures. My personal background is mostly as a startup entrepreneur operator in renewable energy. So at this point, wind, solar, both utility scale and behind the meter, and batteries, both utility scale and behind the meter. And moved over to the investment side about 3 years ago when we started Blue Ox Ventures. We're a bit of a different firm. We take more of a rifle shot approach where we find one firm and one idea that we have high conviction in, and we go all in and jump in the trenches and work with them. And we're pretty excited about being on the panel today. Thanks.
Thanks, Mike. And Allison, do you mind jumping in?
Great. Nice to meet you all. Allison Myers. I am co-founder and general partner at Buoyant Ventures. We are a newly founded fund as of 2020, focused on digital solutions for climate. So my background, I worked with utilities for a number of years as a consultant, working on a number of different sort of blue sky strategies, so customer regulatory go-to-market strategies, and integrating a lot of the technologies that we're seeing today become more and more common. But at Buoyant, we focus on that, but very much the software side, software sensors, really trying to layer digital on top of what we already have in terms of a strong infrastructure layer today. But excited to speak with you all.
Thanks, Allison. And last but not least, Daniel.
Thanks, Eric, and thank you to the PLMA and to Eric for the invitation to participate. My name is Daniel Velez Lopez. I work with National Grid Partners. National Grid Partners is National Grid's corporate venture and innovation arm. We focus on investing in companies that bring strategic value to our core businesses, which include regulated electric and gas utilities in both the US and the UK, as well as renewables and unregulated arm called National Grid Ventures. I'm actually not an investor myself. I work on our business development team, which is a pretty critical component of our funds structure, and really focus on facilitating collaborations between startups and our core businesses. Background in policy and research, used to be a fellow PhD. So I was doing a PhD before joining National Grid, focused on public policy and energy and environmental economics.
Great. Well, thank you all for joining us today and sharing your thoughts and insights. Rich, if you wouldn't mind popping over to the next slide, I'll just give a quick background again on the Spark DER Innovation Group. The charter is to stimulate DER advancement by providing a process platform for identifying industry needs and accelerating innovation. Over the years, this collaborative effort, not necessarily a one-way conversation, but a collaborative effort with PLMA members, we put together some of the different challenge categories to try to wrap our arms around this big, challenging beast of stimulating DER advancement. And to that end, we got a great, well-rounded group of people here to talk about a number of different topics, and really was instigated this summer related to policy matters, which have evolved quite a bit, even certainly at the federal level, and are moving much faster than they have in the past, arguably. Whether it's related to FERC 2222 or the Infrastructure Reduction Act, there's a lot going on at the federal level. But this isn't a policy group. There's a lot to talk about: customer engagement, integration standards, and also the monetization or value of DERs. And so hope to cover those items this afternoon and morning, depending on where you are. With that, I'll jump in here with the first question for Elta, and feel free to kind of bounce around and like you did in the prep session, react to others' questions and responses. Otherwise, I'll call you out and maybe see if you want to elaborate a little bit. But Elta, first question really is related to FERC 2222. One of the premises is that it will remove barriers to investing in DERs. And to that end, and with the framing of some of those challenges before of consumer issues, technology, as well as issues or opportunities, how do you see FERC 2222 playing in, or just the future of DERs?
I think for us, it is a revenue stream for, the companies that we're looking at that we would like to see essentially grow, right? Right now, it's kind of one of those, it's nice to have, but it doesn't quite have the scale that we would like it to have in the near term, right? So I'm hoping as we kind of iron out more of the details across ISO and RTO territories, that it does grow into something that we really, you could see a company that comes to us and says, this is mainly where we hope to make money, and I hope for that to be an investable company, right? But right now, it's really just something nice, something additional that's a revenue item, but not necessarily something that we would look at as a main item for a company. I don't know if anyone has kind of a different approach here, but so far that's kind of the humbling approach.
I might call on Daniel, if I may, knowing that you're working with National Grid and many OPCOs with different state and ISO territories. If you have any thoughts there of that patchwork.
Yeah, I think I would second Elta's comment. I guess, as a utility, we're thinking about what attracts our customers, and I think it's an additional opportunity that gets stacked among many. And, we're kind of interested in seeing who are the providers that will help customers figure out how to navigate that complex set of incentives that they're facing. And that's both sort of like from a platform perspective and monetizing a particular asset, but also like what are the assets you should be building and where and how, to kind of maximize both the value to the owner and then, any of the grid needs that we're trying to manage in terms of the distribution grid and so forth.
Yeah, and maybe just to jump in, I think one of the key words that Daniel just used is stacked value. So thinking about how this sort of is layered on top of the asset itself and maybe additional, like the value that it's currently providing, and thinking about how you continue to stack those layers to really help make some of the economics pencil better.
Right, and I think the thing to keep in mind here with Order 2222, so I was one of those people that took a look I look at the early filings, right? So the first kind of filings that the ISOs brought in were like, take an assessment of your DERs on your grid today, and everyone came back with just their demand response programs, right? Which essentially kind of shows you that it was just very much, looking at the surface and not digging deeper, nor did you have those layers of visibility. So I think like where we can work with enabling technologies to kind of create those layers of visibility, both for the utility layer, right, and the ISO RTO, so that they can, one, know where these assets are, and two, where they can find the highest value both for the grid, for the market, for the customer within each of the different kind of programs that are opening up.
I'll chime in quickly. The way we talk about for 2222 and sort of apply it in our investment thinking is that, the big macro picture, right, is that the way the grid operates is changing, and that's being forced by a change in the generating technologies on the grid, on both sides, right, the customer side and the wholesale side. And there's a whole bunch of new technologies that are going to be required to operate the grid in this new way and solve what we call the mismatch problem, or the duck curve, and a whole bunch of other related problems. And most markets, utilities can't quite envision that yet. It's all more future than present. And we kind of think for 2222 forces the conversation, right, and turns that conversation into policy. And it's sort of like herding cats, in one general direction, but it's going to be messy, and the specific policy outcomes are probably not knowable. And I guess we hope that this group and everyone else who's working on DRs is can provide good guidance on how to craft good policy, so that assets behind the meter can actually take advantage of, or can actually provide real value to the grid and get fairly compensated for it.
Yeah, can I also add one more thing? I think customers need to be compensated appropriately, right? I think, the last couple of summers, we've seen behavioral demand response kind of kick in, right? With flex alerts in California, New York last summer, right? The mayor sent a text message that essentially kept blackouts from happening in New York City. And everyone's like, oh, great, thanks to the response of the customers. I'm like, no, but you have programs that customers can get paid for to do this. So you had, all of these people that took an action, a behavioral action, but didn't get paid for it, right? And, you kind of have tens and hundreds of megawatts that kind of sit and get paid to be there, that sometimes don't perform. So I think that's something that we need to account for.
Yeah, I think actually what you're calling out is actually really incredible too, because we all know that like human behavior and action is something that's really difficult. And this is where, when we talk about, digital technologies as part of Buoyant's thesis, this is where we see it coming in and making it easier on the customer, making it almost set it and forget it, but also like responding when needed. There's a ton of really cool innovations and technologies out there that can track customer behavior and know when they can make these calls without affecting customer comfort. And that is where I think there's a lot of innovation to be had. And to, at its point, making sure that there's compensation associated with that is all part of the value stack, and having some of these technologies enter into the space as well.
Yeah, one just very related topic on customer engagement that's been coming up recently is kind of, how do you generate interest from the customer to participate? What's the approach in the marketing that's going to resonate with that particular person? these texts from the mayor appeal to everyone's sense of social responsibility and civic duty. Once you put some dollars, like how are you motivating people? Is it through the environmental benefits? Is it still through the sort of civic duty? Or is it actually purely financial? And, you know, figuring out what's going to appeal the most to a particular customer may kind of affect how, you know, these programs roll out, especially on the residential side. You know, commercial, it's a little bit easier.
Yeah, the thing is, I think, you know, different types of customers will definitely be drawn into different aspects of this, right? I do think, you know, from a monetary point of view, you know, $50, $100 for responding to events for a summer, right? That's typically an average what, you know, someone would get without extreme events, right? To most kind of upper income individuals, it won't make a difference, but this is a fantastic way to engage LMI, right? So I think you have to kind of think about the customer group that you're targeting, because someone that is in a higher income range, you can actually target the batteries and the electric vehicle charging. Whereas if you're just talking about kind of thermostat control and automating that, right, and really just, you know, having that monetary value associated, that's somewhere where you can target as well. So I think it's a great way to bring everyone along on this journey.
That's great. We already, I mean, with one question down, touched on value stacking, customer engagement, and not to pivot away from those two topics, certainly incorporate them as appropriate. But certainly the technology aspect of things was brought up here. I don't know if anybody wants to has an initial response, or otherwise I'll call on somebody. But do you see any gaps or opportunities when it comes to technologies? Is it a hardware matter, software, infrastructure, or services? I don't know if those are the right ways to categorize it, but where are those challenges or opportunities from a business model or services technology space?
Yeah, I can take a first crack. I do think that there's a bit of a bridge that we're trying to cross right now, where we have a lot of assets in the field that aren't smart, particularly on sort of residential, where you see more of a homogeneous population in terms of types of energy usage. But it's much sort of smaller pieces of the pie. And there will be small bits of hardware that you can attach to those assets to really help bridge the gap, you know, encourage some of these programs, or just generally start the pathway towards using some of these newer technologies. I think when it comes to using these technologies, there's some hesitation, and rightfully so, in terms of risk aversion towards sometimes what feels like a black box in some of these technologies, and what exactly they're doing and the decisions that they're automatically making, whether you're talking about artificial intelligence or others, machine learning, you know, just general algorithms, and exactly understanding that a lot of the folks that are approving these, or even regulators, aren't necessarily experts in some of these technologies themselves, so it's more difficult to explain. So I really see this as like a bridging period over all of those technologies that you mentioned, as well as the hardware, software. I would love to see us get further down the road of really accepting the software solutions, and, you know, putting assets in the field, whether it's through residential, commercial, industrial programs, or just thinking about more broadly, like, how are we encouraging these technologies to be picked up and utilized as we sort of continue on the technology continuum.
Yeah, I'm going to add one point here too. I think it's, you know, you do have energy as a service type models out there in the market. One of our portfolio companies, Green Structure, is actually going out to commercial and industrial customers saying, hey, you don't have to own the assets, right? We have an entity that can do that, but all you see is a bill every month, right? That's really powerful, where a customer has an option now where you don't have to put down a bunch of capital and still get all the benefits, you know? So, and on the resi side, this is also popping up. I think Sealed is one of those companies that's kind of farther ahead in doing kind of whole home retrofits. Again, no relationship to us, but I just really like the model where a customer has options, right? And now once you kind of layer in all of the Inflation Reduction Act incentives, like an LMI customer, right, and in the New York City area can get up to $14,000, right, in kind of rebates and incentives to electrify, green the home. That's really powerful, I would say, in this environment. And then on top of that, if you layer all of that, right, you can get additional benefits from participating in various programs, and also just pure savings, right? That add up to over $1,000 a month. That's a powerful value proposition.
Yeah, I'd add that. So I mean, there's a technology theme here and a business model theme here, and I think both apply. And Allison, like you said, there's going to be a hardware component to all of this because you have to have basic hardware, hopefully very cheap, simple hardware, right? That allows communications to happen back and forth and control signals to go back and forth. And then, business model is also important where, customers don't have to feel like they have to front a large check in order to participate. And I think the enabling factor at the end of the day is it's going to have to be basically seamless behind the scenes, automated. It's not like we were just talking about, right? Text from the governor or the mayor is not a way to operate the grid. There should be smart software that can make those calculations and trade-offs real time, and with enabling, hardware underneath.
Yeah, I was just going to add a quick thing. So definitely on the software side, the automation with the ability to let the customer kind of communicate their preferences so that they can, have the services from the energy that they can rely on that are necessary. I think on the hardware side, there's also space for innovation, and we're seeing some of it in terms of unlocking new use cases around where you can locate DERs. Where there's a lot of value. So for example, we have a company in our portfolio, Verity, that's developed battery storage that's fire resistant and can prevent runaway thermal reactions from taking place, which makes it possible to build pretty large systems in places where previously your fire department just wouldn't allow it. And some of those dense places are where you could get the most value to the grid, right? Manhattan or Brooklyn or something like that. And so I think there's space for innovation on both ends.
I mean, also, can we talk about the rebate and the Inflation Reduction Act for a smart panel? I think that could be pretty revolutionary in what you can do with a whole home, right? You can get the rebate, you can get a tax incentive if you associate it with your, your storage or your solar panels too, right? That's a game changer for the whole home and kind of the automation and set it and forget it and just essentially reap all of those benefits, right, through just setting your preferences. I think that's a proposition right there that once you kind of kickstart this rollout is a game changer for the home.
I mean, I also would say the one thing that I've been thinking a lot about lately, especially since the IRA passed, is really, how is everyone going to manage their way through this? Because these are, no offense to anyone on the call, but these are government programs, and they are not always the easiest ones to figure out. If you qualify for them, can be a frustrating process making it through. I think there's a huge role to play from a number of different entities, because it will not be easy by any means, but how can we simplify this for customers of all different types so that this money goes first to where it's supposed to go, and second, really gets picked up. I mean, it would be better for us the sooner that this sort of gets in the ground and activated and people adopt these things. Clearly, there's a limit to what supply chains can take and how quickly we can get everything, implemented. But the faster that happens, the better. The more sort of streamlined approach you have to this, the better. And I think that's really sort of another sort of newer place to focus on, given some of the recent government actions.
And I think you framed that, Allison, kind of related to the customer experience and pulling it all together. Like you said, you get more involved in really in the trenches with some of your portfolio members. And given there's my read, and maybe others would agree, that there's, no silver bullet, always limited resources, despite a lot of funding, both from the investment community and government community going towards this space. But I'll start with Mike here. What partnerships or alliances do you look to bring together, or to point some of your portfolio members towards to help maybe partner or work together to tackle some of these big changes?
Well, I mean, when we're talking with our portfolio companies, we have a somewhat maniacal focus on the customer, and so we're always talking to the customer about what solves their problem, right? So all of our partnerships are really focused on are really focused around that, but we want to make sure that they stay, you know, informed about which way policy is going, right? So we try and either assist them or direct them to some of the groups that are influencing policy, especially on the leading edge, like California, New York, also in Texas. And because we think that their product roadmap and the way they talk to the customer and the way they position their product or services needs to be sort of well informed with where policy is going, and as much as possible, right? Stay smart about it.
I think too, like to Mike's point of sort of like being ahead of the game and trying to talk to some of those policymakers, there's another point here of figuring out exactly what your customer is experiencing on the other end, and trying to streamline and automate some of that as much as possible. And it can be very simple things that don't necessarily scale to the level that you'd like to see at a very mature company, where you can start more sort of in a form filling out process, which helps direct sort of what incentives would be relevant for different customers, and then grow that to something that is much more in the sense of automated, in terms of the information is automatically collected from any other paperwork that's already been filled out, and thinking about how they grow along that timeline. But I do think doing some things that don't scale initially, and then figuring out ways to automate the experience that you're offering customers, is a classic way to really break into the market, as well as maniacally focus on the customers, which I like that term, Mike.
That's a great term. I think for anyone that hasn't looked at the Rewiring America IRA calculator, that's a great way to get kind of a high level view of what you qualify for, and kind of a snapshot view. So I'm hoping to we can make it as simple as that for customers. I do think that, you know, for some of these larger ticket items, it still requires that kitchen table conversation, right? Solar is one of those big ticket items, storage, right? That still requires that. So how many of these kind of things that we can take advantage of can we automate this process to kind of streamline it, versus, you know, having to have those conversations that take a long time, that are actually quite costly, right? And at the scale and at the speed of which we want to move, you know, we have to move past this traditional model.
And that's a great point. DISIRE is another good one for state level incentives as well. And those sorts of things are super helpful to get everyone on the same page.
I saw a couple of questions come in the chat. I just wanted to remind others, if you want to ask them, please do. The questions so far have been around the kind of the status of FERC 2222 and ISOs, the different variety of ISOs applications or their implementation. But feel free to ask any questions. Now's a great time if you wanted to chime in and ask them. In the meantime, I will keep going here. One thing is, you're talking and emphasizing the customers and also the set it and forget it. Are you seeing, and maybe a personal note, that I'm a huge energy geek. I love to sign up for utility programs as soon as I can to see how the process works, what the customer experience is, and also what the technology experience is too. But I'm probably admittedly one of few that really wants to spend a lot of time on these things firsthand. Do you see consumers evolving more to that prosumer, or is it the technologies are making it easier to set it and forget it, where there are the masses that aren't energy nerds like me can still participate in these evolving markets or financial opportunities or contribute to the grid?
I have a quick customer example. So one of our portfolio companies, Extensible Energy, it's load control software for commercial buildings. For somewhat odd reasons, they've ended up with a lot of car dealerships as the customers. And as a segment, it's a pretty interesting one. It's basically retail. It's a big showroom, right? They're 40, 50, 60,000 square foot buildings. And they don't care about carbon, right? They care about selling cars. And they don't care about energy, or at least they didn't. And what's really interesting that we're seeing is that for the first time, they're having to think about energy in a new way, and it's really being driven by selling EVs. So customers are demanding EVs. That's a hot thing to sell. They make a lot of margin. They want to sell more of those. If they want to sell EVs, they got to install EV chargers. And the kind of phone calls Extensible gets are, oh my God, what am I going to do? How am I going to manage this? What's it going to do to my bill? Can you help me? Right. And I bring that little anecdote is what I'm trying to highlight is that a customer who's never really had to think about energy or cared to think about energy is all of a sudden sort of being forced to. So I think all these new technologies will drive some new consumer behavior.
Yeah, one of my favorite stats that we had at Accenture, of my previous employer, was that residential utility customers spend 10 minutes a year thinking about the utility, or really thinking about their bill. And it's typically one of two reasons: either they can't pay it or there's an outage. And I think that what we've seen is a broader education of folks, for reasons like what Mike highlighted in terms of electrification of sort of either what you're selling or your assets, or, you know, as a residential customer, like your car. And then also some of these unfortunate events where we've seen, I mean, my brother lives in Austin, Texas, and my family is now very well educated on how the Texas grid works, which is a fascinating example of just how an event like that can really cause people to dig in deeper, and get more engaged in some of the issues that have previously been more complex and under the hood, and not really translated into what the average person thinks about on a day-to-day basis. But I think that there's an increase because of those events. I think that there's an increase because of electrification overall and interest in that. And these are opportunities to really speak to customers across the board about different opportunities that they have, both to decarbonize as well as thinking about energy savings overall.
Yeah, I would add, while I think I see increasing salience of these topics among customers, the companies that are going to bring serious value need to come with something beyond just insight. So companies that bring a solution that takes as much action and decision making away from the customer as possible and offers them a very, very simple package. And that's particularly important once you get away from the really, really large corporate customers that have energy procurement departments, that have energy efficiency teams of their own. You know, they're looking to scrape for every cent, but you start hitting the middle commercial space. There's no time, there's no capital to dedicate to these activities. And so people who can bring a package of value and even, you know, financing, ideally off balance sheet, make those kinds of decisions much easier to make. And that's where you're really likely to make a difference. Otherwise, you know, it's salient for a period of time. You know, we're in an energy crisis right now globally, but who knows what things look like in 2 years. And if this is a very salient issue, it's hard to know, and people move on.
Yeah, maybe just piling back on, thinking about how you use these moments where people are actually engaged in thinking about it for the first time is probably the best time for you to then come in with some sort of offering or platform. And this might happen for the next year or two, but then the door kind of shuts as people get used to the new normal.
I think climate change is also forcing the discussion too. So, you know, we've got wildfire smoke in the air here in Oregon today, and there's threats of power shutoffs. And so whether it's you know, thinking about buying an EV or selling an EV, or if the grid's, you know, being stressed because of either heat or wildfires or whatever it may be, every one of these things is forcing an energy conversation. And what's different than, say, 20 years ago, right, when I was developing my first wind farm, or when, you know, SunEdison started selling, you know, solar via PPA, is a lot of that was just selling sort of, you know, the green, you know, symbolic value, right, of doing clean energy to feel good. And now it's different. It feels very different to me, and it feels like it's a broader, deeper conversation. And Eric, I hope it's, you know, what you said is that maybe everybody's becoming a little bit more aware and a little bit more of a prosumer. But like Daniel said, I think nobody's really capable of managing energy because it's a 24/7, 365 job. We all have our lives to live or our businesses to run. And so it really you really do need to have sort of automated solutions for this to work, at scale, across the entire nation, across the entire grid.
Yeah, and thinking back, I don't know, call it 15 years ago or so, and to kind of clean tech 101, but also, I mean, there's so many signs pointing to the need to clean up our energy supply, continue to innovate, but also do so in an equitable manner. When it comes to the pace of things and doing things at the right time, but also at the right scale, this is one of the question to nod, one that came through the chat about SPACs, but I guess, do you see VCs playing a role in sparking innovation just through brute force, kind of that giving funding that's out there, learning and iterating and hopefully making it to the other side? But and I guess with that framing of, I mean, is now the time to go all in, or is this still going to take some time to get to that next level?
I mean, I think we can talk about, what sort of happened in cleantech 1.0 and think about like a lot of the hardware investments and maybe investments in technologies that weren't quite ready to come out of the lab or ready to be scaled. And, that takes it, deployment timeframes are not something to ignore as a venture capitalist. Like you have an X year period, and, Daniel, might be somewhat different for you, but to get your money back to your investors. And so there's space for that. I do think I've seen more from an impact investor lens, where a bit more patient capital coming in areas. But overall, I think that the pressure on timelines encourages innovation. It encourages us to build on the hardware and infrastructure that is already deployed and out there, and leveraging those resources with increased digital technologies that we've been talking about to increase the value and make economics pencil for then the next wave of hardware, along with sort of paired digital already software coming in and being invested there. But I think that now is definitely an all-in time, but I would caution anyone who's going all in and not really thinking about the economics. Not that most people would do that, but I think that there was a lot of excitement around cleantech 1.0, that thinking about the limits of regulations, physics, as well as deployment timeframes is just something that we need to consider as we do go, quote unquote, all in.
I just to react a little bit, I think there's a more robust ecosystem today than there was during cleantech 1.0 to support these technologies. And I frankly think a lot of it comes down to people who were part of the solar and wind revolution over the last 2 decades, right? Who now are running private equity shops or other types of funds, or are getting into venture capital like Mike, who have expertise around deploying infrastructure that they can then bring to support the entrepreneurs who are trying to do that, who may have had some experience selling enterprise software. And this is just a completely different animal, requires a different skill set, requires, different capabilities. And we're also seeing, I think a lot of new sources of capital, catalyst capital, mezzanine capital that is, purpose-built for helping those projects become a reality, where venture capital may be better suited for software or digital technologies that can give you that return that investors are sort of expected historically, that is a little bit shorter term.
Yeah, I would echo all of that. I think certainly there are some investments out there that'll fit the venture capital model of sort of that hyper growth and exit in a relatively short time frame. But the realities of physics, as you said, and electrons and getting hardware installed, right, just sort of naturally slows things down. It just can't scale as fast as a Facebook, right? There's inherent physical limitations. So it is really important to have those different parts of the capital markets who see an opportunity and are willing to be a little bit more patient than what I would call sort of your typical generalist VC fund. The flip side of that, of course, is that I think the opportunity is a lot bigger, right? These are trillion-dollar markets, when we're talking about the energy systems of the globe. So I think it's one of the reasons we have the model we do of picking individual companies is because that gives us the flexibility to structure a deal and structure capital that's a fit for the business model and what makes sense. So if we like the business, but it doesn't fit into a specific box, we can customize the approach. And a lot of that's, I guess, from my experience being on the operator side of the world, a lot of the, as you're saying, a lot of the generalist VC funds at Cleantech 1.0, I don't think fully appreciated sort of the realities of the business. And this is old news, but it still informs sort of our investing approach now.
Maybe one more example to add, because we've talked a lot about sort of like the additional value that digital can provide, but also even thinking about prioritization. We just invested in a company called Audette.io. They use satellite data and building footprint data to really understand what would be the benefits of upgrading that building without putting boots on the ground. So if you think about large portfolios of real estate and how do you spend your retrofit dollars or your maintenance dollars over time, prioritizing those as best as possible is a really good way where digital comes in and I think plays a role in sort of prioritizing this, in some ways solving for some of the issues that we've seen in the past of where's the best place to put that hardware and making it as efficient as possible. I mean, 40% of retrofit project costs are just administrative costs. How do we get that down? Because that's going to really help with spending those dollars in more actionable places. Kind of like what Daniel's saying of go beyond the insight. Let's really talk about the action and offer sort of like the easy button.
So keeping a little bit with the thread about pace, many utilities have committed to X% emissions reductions, X% renewables, what have you, by 2030, 2040, 2050. But also many have also said, but we don't know how to get to that last 20%, call it. When you're looking at investments and the pace of things, and even just your investment priorities, are you looking at early stage technologies that might take years or decades to develop, or looking at something that's more commercialized today? And otherwise, how do you look at that kind of that last mile of getting to very clean energy, at least from a DER perspective, understanding that there's more to it than just DERs? Is there any stage of companies that you're looking to invest in? Is maybe the simple question.
I'll give my, I guess, perspective. So National Grid has a net zero target for scope 1, 2, and 3 by 2050. And I think there's a significant amount of work that we need to do by 2030 around deploying technologies, many that are available today, but where there's innovation that's driving that deployment, where there's plenty of work for us to do. I think in terms of trying to figure out what's going to fill in the last 10% of emissions, it's anyone's guess how exactly that works out. I think that's a space for basic science, for government to really play an important role in driving that long-term, decades-long innovation. A bit of my own personal view there.
Yeah, utilities aren't the only ones making these commitments without having the plan in place, to be fair. I think that there's a lot of very ambitious commitments that CEOs have made for their large companies. And this is sort of how work gets done at some of these large companies. I can tell you, as someone that used to consult for a lot of them, putting out the big audacious goal out there and then letting sort of the company figure it out over time is something that I think is done quite commonly. For Buoyant, we look at seed and Series A, and that typically means a few $100,000 of revenue to a few million dollars of revenue annually. Typically, we look for ARR as part of that digital and software focus. And we focus mostly on what can be have the greatest sort of solution driving, either for adapting to climate change or mitigating from climate change. So the greatest impact of that at scale, because climate change is such this monstrous issue in terms of size, that's where we see digital really helping and scaling up and solving for the solution. So the things we invest in are typically market ready and already have customers engaged, and to where that's been proven out.
Yeah, we tend to, because of our model, we end up in some different categories, but in terms of venture investments, we tend to focus on the early stage. So seed stage, pushing into Series A, probably a little bit earlier actually than Buoyant. And Blue Ox also looks at things like buyouts, existing businesses that are in a segment that we see being either impacted or have, sort of energy transition, creating an opportunity for a particular business, and then we see a way to sort of strategically redirect that business, to the benefit of that company.
So I had a question earlier that I was saving for the end, but jumped in while the conversation was going that way, along the lines of what partnerships and alliances do you look to bring together or point your portfolio companies towards? But to flip that, for the PLMA audience, that as a bunch of different practitioners, utilities, emerging companies in this energy space, and particularly related to DERs and demand response, flipping it, who or how do early stage companies get into the VC mix?
Always a good question. A lot of companies start with, local incubator, not necessarily local anymore, right? Everything's so virtual, but, incubators and accelerators are great. You can find those, either associated with a VC firm or maybe a university or maybe an industry group. Angel groups, those are all over the country now, especially if you're in the cleantech space. I'll put in a plug for E8 Ventures, which is in the Northwest. It's an angel group focused on cleantech. It's been around for over 15 years, focused on the space. So they were early, and CEVG is in the Northeast, as a couple examples. So if you're just getting started, those are good ways.
Yeah. Climate Tech VC is a really great organization that focuses on publishing a lot of the accelerators and funders and whatnot. But I agree with Mike, the accelerators are really the best place to start. There's a lot of really interesting initiatives. The Evergreen Climate Innovations is one that focuses on the Midwest, which they consider anywhere between Pittsburgh and Colorado. So quite a wide definition of that. But there's others in LA, there's Lacey, Elemental, there's a ton out there. And I think just sort of trying to plug into the community as much as possible and speak to folks in those spaces to help see like who's next, who should I be speaking to. And in some ways it's a wonderfully small community, and others it's rapidly growing, but I think that there's a lot of really collaborative energy in it, which is nice. So I think that everyone's open.
Yeah, if I were to add one other, and I saw what I think was a former National Grid colleague suggest Greentown Labs in Massachusetts, also in Houston, but kind of an interesting space to build a network in clean tech is this My Climate Journey community that Jason Jacobs started on Slack. It costs money, but it's pretty cheap, and you kind of meet, all kinds of varieties of people on all parts of the business, be it entrepreneurs, be it practitioners in corporates, or be it investors as well. And I've seen a lot of activity there. So I think that's a pretty cool option.
And maybe one more thinking about, like, there's women in clean tech or women in sustainability. There's a lot of different groups out there that are really focused on encouraging diversity in the space as well. So finding those groups, I think, is also super helpful in terms of developing early connections, as well as finding folks that sort of are similar to you in one way or another. And that's super helpful as well.
Great. Well, thank you. Before Rich joins in and wraps this up in a couple of minutes, are there any parting words of wisdom you want to share? I'm looking at Allison on the upper right screen. If you want to start there, put you on the spot. Any thoughts or reactions?
I feel like I've been talking a lot. So no, I mean, I think that sort of parting words is this is such an exciting time to be involved in this space, and I am continually impressed by the talent and sort of energy, human energy that is moving into this space. So I am always open for introductions to others. You can find me on LinkedIn, and yeah, I just think this is the most exciting time that we could be focused on this this sort of topic.
Mike?
I can go next. I guess we're all giving words of wisdom. I don't know how wise, but I would echo Allison's words. The combination of, like, the geopolitical moment, the local policy moment, the energy that we're seeing in the corporate world to engage with this topic is kind of unprecedented. So if you were saying, you know, kind of, Eric, like, is this the time to go all in? I mean, I hope so. I think it really is a time to get invested in this type of work. I think there's a lot of opportunity. And I know there's kind of a diverse audience here. So just like Allison, if anyone wants to reach out, both from a utility peer perspective to learn about the work we're doing at National Grid with our portfolio companies, or, you know, entrepreneurs looking to learn more about how to engage with National Grid, please feel free to get in touch through LinkedIn.
Good ones. I'll echo all of that. We do a lot of, we actually spend a lot of time with companies that you know, come to us for funding and maybe aren't ready yet, but we'll provide a lot of advice and guidance to try and be helpful. I would say that me and my partner are in the true believer crowd of really wanting to make an impact with what we're doing. And you know, I guess if the question is, you know, is now the time? I'm like, well, if not now, when, right? So I am as hopeful as everyone that, you know, big change is really happening. You know, being in this industry for 20 plus years now, I would say it feels really different, and that's encouraging. It also feels like, holy crap, we got a lot of work to do. So I would say everyone pile on. Let's get it done.
Great. Well, thank you. We covered a handful of different topics there. You know, it started with the policy matters related to FERC 2222, but obviously this energy ecosystem that we're in crosses a number of different geographies. So we're talking about a patchwork of geographies of policies, from state PUCs to ISOs to the federal level, and even hyper-local and towns and cities that are taking on climate change and energy management in their own ways. Other complexities of stacked values from these different kind of nodes on the grid, including generation, transmission, and distribution, and kind of everything in between. And also along those lines, don't forget about the customer. On the other side of the meter, the energy delivery doesn't just stop at the meter. It does go into homes and businesses with lights, refrigerators keeping our beers cold and keeping our showers warm. And so I heard a lot of emphasis on the customers, which certainly is appreciated, but it's no complex beast to tackle, but a lot of passionate people, of course, on the panel here today and listening in. They're really pleased to share this conversation and have you all today. With that, Rich, do you want to bring it around?
Yes, Eric, thank you. So again, as we're coming towards the end of our time, I'd like to sincerely thank Allison, Mike, Elta, and Daniel for joining us and having such a rich conversation during this roundtable presentation. So it's really deeply appreciated, and I think it certainly adds to our understanding of what's going on as we were indicating, kind of a sea change situation from an industry standpoint. Order 2222 is a piece of that, but it's a piece of that, right? There's a whole lot of moving parts and a lot of things that need to happen. And I think these conversations help us get our arms around it just a little bit more. So again, thank you. In addition, this important discussion will be available through PLMA's Load Management Dialogue podcast. You can access that through your favorite podcast platform. We encourage you to go to the PLMA website and access our Load Management Resource Center, which is a searchable content library of PLMA's webinars, publications, conference sessions, and more. Access to this resource center is open to everyone, and we'll post a recording of this discussion here where you'll be able to rewatch it at a later date. And finally, a few quick reminders of other things coming up from PLMA. Tomorrow, September 13th, PLMA's newest interest group, the Commercial Industrial Load Flexibility Interest Group, are holding a session seeking input around their future activities. We encourage member companies to send a representative to this session and have your perspectives represented during this kickoff. Next week, we are holding training in Denver, Colorado. This is getting time. If you're still thinking about it, it's time to make a decision. We have classes both on wholesale markets as well as program design and implementation that we're holding next week. You can go to our calendar, peakload.org/calendar for more information. And then certainly, in November 14th through 16th, our 46th conference is going to be in Phoenix, Arizona. I have a rich agenda of topics across a lot of this flexible load space. And I encourage you to check that out and register soon. Hotel rooms will start getting scarce in the middle of October, so please start thinking about that. And then finally, reminder, just please sign up for your webinars, trainings, and conference on the PLMA calendar. We'll see you again soon. You've been listening to a Load Management Dialogue presented by PLMA. To learn about upcoming dialogues and for an archive of past recordings, visit peakload.org or your favorite podcast platform. This concludes this edition. Thanks, everyone, and thank you.